Joining us now by phone is CNBC's own Jim Cramer to map out a game plan for tomorrow's trading day. He's the voice of the American investor. Jim, we appreciate you taking some time on us on a Sunday night. This is ugly.
Oh, true, Brian. It's definitely ugly, but we have to remember it's been ugly six times in the last 40 years. I mean, big bear markets. And every time you had to either buy pretty much very quickly if you wanted to get a good price, except for in 2007, 2009, where it took 6 years to get back. So we're just trying to figure out exactly which of those two baskets we have. And I'd say it's more the former. I'm not going to panic. I'm not going to say, get out now. I think that you got to stay the course here.
Yeah, and you were writing to your Investing Club newsletters, and I'm gonna read Jim Cramer to Jim Cramer. You said you think it's reasonable we could see an 18 multiple on $220 in earnings, which takes us down to about 4,000, but there is a worst case possible scenario even on top of that. What are some of the various possible scenarios, Jim, that you see?
Sure. Well, I think the biggest problem we have is that if you wanted to try to bottom fish tomorrow, and I don't advise that, you have to worry that Europe is going to come after us. And I figure Europe comes after us between 3 and 7 days later. That would be the moment where I think if you wanted to do some buying, you wanted to be fine. Look, if you need the money in the next year, you do want to do some selling. If you're margined, geez, I mean, I don't even know if you should bother because I'm going to send you an invitation to your funeral. But I do believe that what's going to happen is we'll settle in. Look, the president wants these tariffs. This is not a negotiation. A lot of this is by Peter Navarro and influencing the president. And Peter wants the world trade imbalance with China corrected. And all the countries that are really heavily tariffed that don't look like they make any sense tend to be backdoors of China sending us things. So we're going to have to deal with that. I don't think that anything's going to be unscathed. If you wanted to know what should be unscathed, it would be the American utilities. No tariff, nothing. They're a terrific place because interest rates are going down. We have interest rates going down. I thought the Secretary Treasury was pretty good investment today when he said rates are coming down and oil's coming down. But the problem is that the price earnings of oil plus to come down. What we'll pay for stocks. And that's what you're seeing right now is you're seeing the multiple compression just ratcheting down. And you're also, of course, going to see the earnings come down when we start seeing the reports in the next 10 days.
Yeah, and those are going to be certainly critical, I would imagine, not only the numbers, but what the companies say, because much of what they've done already on the earnings, Jim, we know happened before the tariffs, or at least even the announcement of the tariffs. So what are you then watching most closely right now? What's sort of a 1, 2, and 3 on Jim Cramer's watch list? Well,
first, I'm going to look at interest rates because if let's say the 10-year goes to, goes to 3.5 on a flight to quality. Well, then mortgage rates are going to go down, and you're going to have a second, kind of a minor chord going on, which just says, you know what, if we buy American companies, maybe we're okay. So number one is American companies with no tariff exposure seem interesting to me. And if they get carried out and they're just washed down the bathtub, then I think that I want to look at those because they shouldn't be. The second thing I'm looking at is I want to see whether we get any blinking at all by anyone. And then the question with the blinking is, will someone say, listen, we're going to start looking at American companies that are being tariffed and non-American companies that are being tariffed, which are being trade to commerce. Commerce should be able to say, wait a second, we look at Vietnam. We had a lot of companies move to Vietnam, and we're tariffing them the same way we are tariffing companies that are transshipping Chinese goods. So we want the Commerce Department to get involved and be a little more circumspect about the meat axe tariffs that I think that Peter Navarro influenced the president to do. So I want to see some nuance. We're not going to get rid of the tariffs, but some nuance that makes it so that American companies do better. And then after that, I just want to kind of see exactly where things settle in, again, with the acknowledgement that tomorrow is probably not the bottom, simply because Europe hasn't been heard from yet. S&P 4,000, Brian, is where I'm looking.
Wow, S&P 4,000.
Yeah.
That's a long way down from here.
Well, it rolls us back to October 23. Remember, my ultimate thinking is you have to stay the course. It even made sense to stay the course in 2007. It dropped 46%, awful. But then in 2013, you were back, and then look at the move you missed. If you decided you didn't want to be in it. So let's just be a little cooler, recognize that there is going to be some pain. You can't dodge it. I'm not saying it's too late to sell. If you need the money, say in the next year. But I'm looking for opportunities to come from the reordering, where you're going to see the big money continue to come out of the big international companies we have, and go toward the companies that just don't have any tariff issue. Is a recession on the table? Well, obviously, you don't need me to tell you that. Everyone's going to tell you that. But I do recognize that there are levels to buy things. And I think that panic is really not a strategy.
Quickly, this felt like 2020 when COVID hit, the market falling now like it did then. And I want to remind our viewers, we lost 25% top to bottom in 2022.
We want to be cooler heads than the hedge funds. The hedge funds like to get on TV and really tell you that the world's over. And, billionaires, it comes easy. I just want regular people to recognize that this too shall pass, but not quickly, and that the president is deeply committed to changing the world order. He's not trying to do it in 3 months. Mm-hmm. He's not trying to do it in 3 years. He wants China to heal, and that's a very hard thing to do.
And it's a very hard thing to live through this, but we appreciate the sage and calming words, at least on a Sunday night, Jim.
In 2007, I told people they had to get the hell out, and I was right. All right? I got in a lot of trouble for saying it. And you dodged 50% decline if you listen to me. It's not like that. But I'm not afraid of getting in trouble anyway.
No, you said it. 4,000 EPS estimates.